Okay, we are live, and I hope that the video comes out better this time because it is awfully fuzzy on my end. Just waiting a little bit longer. Don't have anybody on yet. We don't have anybody on here in about a minute or so, then we will get started. And this is being recorded and will be put on YouTube. Okay, that's weird. I was hoping that I would be able to share my screen, but I don't think I can. Says I'm unable to, which is strange. I was really hoping to use some graphics and share my screen, but hi Alana, how are you? So I was really hoping to use some graphics and share my screen on this, but it's telling me it's not supported. So I might have to start looking at some other way of doing this because I was really hoping to use some graphics and share my screen. So, but it doesn't look like that's going to happen. So let's get started. Yeah, so do I. So I know that in the last live I said that we were going to do another live video, but it was going to be on assets and liabilities. After doing some thinking, I thought that was a little too advanced, and we need to start off at the beginning, actually the number one step, step one, which is actually the most. And this is the number one important step to setting up your business properly. So I've got a few questions for you. When you think of a chart of accounts, what do you think they are? So the chart of accounts is actually a listing of every single category, if you will, that you use in your business. These are all of your expenses. So if you've got office supplies, if you've got insurance, utilities, things like that. It's also everything that you own. It's everything that you owe. It's every single account is housed in the chart of accounts. It is how your business runs. As I stated, this was the number one most important step. If it's not set up properly to begin with, your business's financials can and will fall apart, guaranteed. So let's dive into it, shall we? When you're setting up your chart of accounts, you want to make sure that you are accounting for every single thing that you possibly use within your business. So we're talking everything from your bank account, your accounts receivables and payables, all the way to bank service charges. We're talking about everything. Hello, how are you doing, brother? So if you're using something like QuickBooks, both the desktop and the online version will give you a set amount of accounts. In QuickBooks Online, they call them categories. It's a little bit easier to understand that way, so I'll keep on calling them categories instead of accounts. Either way, you can add, delete, or if they are specific to any business, your accounts receivable, accounts payable, inventory, even though many businesses don't use or have inventory, you can deactivate certain accounts. And you're going to want to customize all of this to fit your company. You're going to more than likely use the ones that QuickBooks gives you, at least for the most part. But probably half. And then you'll be either deleting or deactivating the rest, because they're going to account for all of the basics. They're not going to account for your specific needs. They never will, unfortunately. So we want to look at, let's just use a construction company, for instance, since that's what I'm doing with most of them. And you've got a construction company, they're going to deal with cost of goods sold. They're going to deal with materials. They're going to deal with something like small tools, screws, screwdrivers, hammers, drills, you name it. They're going to be dealing with those. Now they have to figure out how they're going to put everything in there. So we want to create the chart of accounts. This chart is going to have your bank account, any of your credit cards. If you remember last week, we were talking about all of the basics of bookkeeping and what it is. And we were talking about liabilities, assets, your bank, expenses, cost of goods sold. This is where all of that is. So we've got your bank that we're putting all of your account information in. If you have any credit cards, we're going to put that under liabilities. When you go into the chart of accounts, and this is why I was really hoping I could do a share screen, because I was going to show you my chart of accounts. QuickBooks will have you put it under something called credit cards. Makes it very simple, but that is a liability. So we've got any credit card accounts, loan accounts. If you own any vehicles, we're going to put your vehicle, any assets at all, your long-term assets, buildings, land, vehicles, any building improvements that you may have had, things like that. We're going to put that in your chart of accounts. We're going to put your cost of goods sold. Most companies will have multiple cost of goods sold categories. And that is because they want to be able to track exactly where their money is going and what they're being paid for. So, for instance, maybe you deal with permits. You're going to want to know exactly how much you spent in permits. Toilet rental. You're going to want to know how much you spent in toilet rental. Your actual materials for specific jobs. You're going to want to know those. Subcontractors for jobs. That. There are a laundry list of cost of goods sold accounts or categories that you can and probably will use, but it's all specifically for reporting. It all gets put under one So on the report, you're actually going to have every single cost of goods sold category listed on your report. And then at the very bottom, underneath all of the cost of goods sold categories, you're going to have the total cost of goods sold. And what that's doing is that's taking the cost of goods sold from your profit. So it gives you a net profit. So we've got all of your cost of goods sold. Excuse me, I've got 3 monitors here and I never know where my mouse is going to be. I'm actually looking at my chart of accounts to make sure I don't miss anything. We've got your equity. If you remember what I was talking about, the owner's equity, which is going to be your owner's draw and your owner's capital, if you will. Any money that you're putting into the business, any money that you're taking out of the business for personal pay or anything purchased personally. And then we've got your expenses. So your advertising, your interest. The interest is actually an other interest. So we've got regular expenses, other expenses, and then you've got regular income and other income. So your other expenses could be your interest. Actually, typically is pretty much just the interest. The other income could be, let's see here. Sorry, yeah, there we go, other income. Okay, so your other income is going to be income from dividends. So if you've got stocks, bonds, mutual funds, things like that, the dividends that come in that they are actually sending to you would be considered other income, any interest earned. So if you're charging interest on a client for a past due bill, which would also be considered a finance charge, then this would be considered interest earned. Any other investment income, tax exempt interest, it's pretty much your interest and your dividends. Anything that has to do with the interest and stocks is what all of this is going to come down to. So when we're creating all of this, and I use QuickBooks Online for the most part, and what I do is I tell it that I want to add this particular category, and it's going to give me a drop down. So let's say that we want to add an expense. I go to expense, and it gives me a type. And this type it goes from anywhere between advertising, bank charges, charitable contributions, your dues and subscriptions, meals and entertainment, finance costs, insurance. There's a whole laundry list of expenses that you're spending your money on in order to keep your business running. So you do that, and then you put in the actual name. Now, QuickBooks Online will actually give you a generic name for each thing. You can choose to use that if you want, but if you're having to use something that is more customized to your business, then you're going to want to create it completely from scratch. You can put a description in there if you want. Now, there's something called an account and a sub-account. So for ease of understanding, we'll call them a category and a subcategory. So let's say you have your cost of goods sold. In order to keep all of them under one category so that it totals all of your cost of goods sold up, we're going to want to create subcategories for each and every one of those. So you're going to have your main category, which is called cost of goods sold, or COGS, as we call it in the accounting world. And then every single actual cost of goods sold category that you're going to create is going to be added as a subcategory underneath that heading. That way, then you get the total that says this is how much the entire thing is just for cost of goods sold. You may want the same thing for your insurances for expenses. We've got, oh my goodness, we've got so many different things. Rent or lease of buildings. Now that could be mailbox rent. It could be rent for the office space that you have, that you're working from. Repairs and maintenance. You could have multiple vehicles and you want to be able to track how much you have spent on repairs for each vehicle. So there's so many different things that you can do with all of this. But like I said, your chart of accounts is the most important aspect of your record keeping. Without it, everything falls apart. If it's done incorrectly, everything falls apart. So you want to make sure that everything is in there that you know is specific to your company's needs. And I would highly recommend that even if you have to pay $50 or $100 to have a bookkeeper look it over, I would highly recommend taking your books, or at least a printout of your chart of accounts, to a bookkeeper and just have them look it over. Have them look it over and tell you if any of these things are just completely unneeded. But you're going to make sure that you want to work with that person one-on-one to make sure that the bookkeeper knows what it is that you need and what it is that you actually work with and what you don't. Because you could have two separate accounts that are almost identical. I have a client that, and I'll just tell you this because this is one of the things that you have to look out for. And I know that this is a little bit more advanced, and we're going to go through it, through this specifically later on. But when it comes to your cost of goods sold, if you're making purchases specifically for materials, well, for any purchases at all for your business that is being used for clients, we're not talking buying a new hammer that you just broke in order to work on the job site. We're not talking about any tools. We're not talking about gloves. We're not talking about uniforms or anything like that. Those are all expensed. We are talking about specifically materials. We're talking about toilet rental. We're talking about your permits. We're talking about your subcontractors. Everything that you have set up to use as a cost of goods sold, please make sure that you put those purchases under those categories. Because I have a client that hasn't understood that they need to put those purchases under those categories and not expense them, because it all goes wrong with the IRS, and you don't want to get audited. You don't want to take your books to a tax preparer. Honestly, a tax preparer that doesn't do any bookkeeping or accounting is probably just going to look at what you give them and just enter it as is. Honestly, I would hope that a tax preparer will look at these things and notice when something is wrong. But tax preparers traditionally are not bookkeepers. So here in the state of Texas, typically in order to be a tax preparer, you have to be a CPA or a bookkeeper. And the laws here are so stringent that we've got to be careful. So if you take your financials for the year to a CPA, you don't want the CPA to take one look at everything and tell you that they're all wrong. You want to know that they're being done correctly. You want to know that you are doing them correctly, which is why we're having these videos. I don't want to see you in the position where you're being audited or you're taking everything to a CPA or a bookkeeper or better yet, a CPA or a tax preparer to find out that everything is wrong and all of the work that you put into it is going to have to be redone. I don't want to see that. And I certainly don't want to see you taking your books to someone like me or someone with even more experience than I have that's going to charge you an astronomical amount of money in order to get everything cleaned up for the year or longer. So trying to get everything entered correctly the first time is key, and not going back and changing things afterwards unless you absolutely know that they're wrong. So I think I've kind of rambled on a little bit, kind of enough. Does anybody have any questions at all? Like I said, I was really hoping to share my screen and to do some graphics, and that is not happening. So Facebook will not let me do it. Says that it is not supported, and for some reason it's telling me I'm not even using my camera. So, any questions? I will tell you that if you do find yourself in that position where you've had books where you've been working on them, you don't know if they're done correctly, you don't know if you're even making any money because you haven't been very diligent about it, about getting things entered, and you don't have any bookkeeping knowledge, but you've been doing it for the last 10 months, and you want to make sure that they're done right. I am actually holding a special through Thanksgiving Day. Come Black Friday, we're actually going to have a nice clearance. Typically, I charge $500 for every month that gets cleaned up, typically, which means that if it needs to be cleaned up for 12 months, that's $6,000. So it gets very costly to have a cleanup job done. That's why you want to make sure that everything is done correctly the first time. For this special, I'm doing the entire year for $750. That is 83% off. So take advantage of it while you can if you think that you're having issues. And if you don't think that you have any knowledge of how much you're making or how much you're spending, take advantage of it now while you can. Because by the first of the year, the price will be going back up. Like I said, this 83% will end at midnight Thanksgiving night. So if nobody has any questions, then I bid you a good evening and I thank you for attending. Good night, and I will see you next week, same time, Wednesday at 7 p.m. Central Standard Time. Thank you. Here's my stinking mouse.